India's economy is undergoing significant shifts, with nearly 90% of the population, approximately 100 crore people, actively participating as consumers, purchasing goods and services. This insight, provided by venture capital firm Bloom Ventures, highlights the evolving nature of India's economic landscape. While India is a rapidly growing economy, the financial burden on the middle class has intensified, particularly after the COVID-19 pandemic. The gap between the rich and poor has widened considerably, with economic experts stating that while the wealth of the rich is increasing, the overall number of wealthy individuals has remained relatively stable. Meanwhile, middle-class households are struggling with rising costs, stagnant wages, and increasing financial insecurity, affecting their ability to spend and contribute to economic growth. This shift is concerning because India's economic progress has historically relied on a thriving middle class with strong purchasing power. A key observation made by Bloom Ventures is that only 10% of the Indian population, approximately 13 to 14 crore people, play a crucial role in driving the country's prosperity and economic development. This elite consumer group is comparable in size to Mexico's total population, yet it holds a disproportionate share of India's wealth and purchasing power. Despite India being the third largest economy in Asia, the expansion of its consumer class has been uneven. The data suggests that while the rich continue to accumulate wealth, the majority of people are experiencing slower income growth. This has led to a situation where only a small segment of the population significantly contributes to high-end consumption and luxury markets, while a large portion of society struggles with financial constraints. The emerging consumer class, estimated at around 30 crore individuals, has begun spending more, but often at an unsustainable rate, leading to financial instability and increased debt burdens. One of the biggest concerns is the slowing growth of purchasing power and overall consumption, which has direct implications for India's economic trajectory. With declining disposable incomes and rising inflation, middle-class households are becoming more cautious with their spending. This decline in purchasing power is not only affecting retail markets but also impacting corporate revenues, job creation, and business investments. Additionally, debt levels are rising, both at the individual and corporate levels, increasing financial risks across industries. The real estate sector, once a major driver of economic growth, is also feeling the strain, with fewer people able to afford property investments. As India moves forward, policymakers and financial experts will need to address these challenges by promoting inclusive economic growth, improving wage structures, and implementing financial reforms to ensure that prosperity is more evenly distributed across all sections of society.